An entrepreneur decided to treat the next 90 days like a financial experiment. And by the end of it, his business wasn't just growing, it was building real wealth. Not because he was in trouble, not because he was desperate, but because he was intentional. Let me tell you about Karan. Karan runs a profitable consulting firm. Revenue was stable, clients were steady, the overall business has been healthy. But one day, while reviewing his quarterly numbers, he noticed something. Revenue was increasing, workload was increasing, but wealth was flat. He wasn't struggling though, but he wasn't building assets either. He realized something powerful. Growth without strategy just creates activity, but strategy creates wealth. So he made a decision. For the next 90 days, he would operate differently. He would run a focused wealth building sprint in his business. He wrote down one clear objective. In 90 days, I will increase my profit, build liquidity, and convert income into assets. The first 30 days were about clarity, not expansion, hiring or marketing, but total clarity. He reviewed 6 months of financial statements. He calculated his true net profit margin, not revenue projections but actual retained earnings. Then he identified something interesting. 25% of his services were producing nearly 70% of his profit. The rest were just time-consuming, low-leverage tasks. So he restructured his offerings. He doubled down on high-margin services, reduced focus on low-yield activities. He renegotiated recurring vendor contracts, eliminated redundant tools, optimized software subscriptions. He didn't cut aggressively. He optimized intelligently. By day 30, he had increased his monthly free cash flow by 15%. It was nothing dramatic, but deliberate. He allocated that surplus into a separate account labeled Wealth Engine. That psychological shift mattered. Now phase 2 began for days 31 to 60. The strategy was acceleration. Karan asked himself a different question. Instead of, how do I get more clients? He asked, how do I increase value per client? He introduced a premium advisory layer to his existing services such as enhanced access, strategic review sessions, and quarterly performance mapping. He increased pricing by 10% across premium clients. He expected resistance, but something unexpected happened. His strongest clients appreciated the added structure. Higher price meant higher perceived value and higher commitment. In 60 days, revenue grew. But more importantly, margins expanded. Then he launched a strategic limited cohort program, high-ticket services for small group of clients. He pre-sold it before building the full framework. Within 3 weeks, it generated significant upfront liquidity. It was not a chaotic growth but planned liquidity. At the end of 60 days, Karan wasn't working more hours. He was working with more intention. Then came phase 3 for days 61 to 90. This is where most entrepreneurs stop. They enjoy the increased revenue, expand expenses, and upgrade lifestyle. But Karan didn't fall into this trap. He moved into asset mode. He allocated a portion of profits into long-term investments. He invested in automation tools to reduce operational dependency on himself. He documented systems and standardized delivery processes. Then he strengthened intellectual property. He began building something scalable. He wasn't chasing income anymore. He was building infrastructure. By day 90, here's what changed. Profit margins were up, liquidity reserves were established. Debt was minimal. Systems were stronger. Client value was higher. Revenue was more predictable. But the biggest transformation was internal. He no longer measured success by revenue. He measured it by retained profit and asset growth. He realized something profound. Wealth isn't built in random bursts. It's built in focused cycles. 90 days of intentional action can compress years of scattered effort The power wasn't in a secret tactic. It wasn't in a viral launch. It wasn't in external funding. It was in structured focus. He gave himself a defined timeline, defined metrics, and defined discipline. Remember, intensity changes behavior. Most entrepreneurs say they want wealth, but they operate without structure. Most say they want scale, but ignore margin. Most say they want freedom, but build businesses dependent entirely on them. Karan chose differently. He treated 90 days like a strategic quarter, an execution sprint, a wealth building laboratory. And when 90 days ended, he didn't stop. He simply reset the next 90-day objective, because wealth is not built in one dramatic moment. It is built in intentional cycles. Now let me ask you a question. If you gave yourself the next 90 days with total clarity, what would change? If you optimized margins by just 10%, if you increased pricing strategically, if you converted profit into assets instead of lifestyle upgrades, where would you be? 90 days is not a big time frame, but one quarter of a year. One focused sprint, one disciplined reset. Not to fix problems, but to accelerate wealth. Whether you are an entrepreneur or a business owner, here's your challenge. Define your 90-day wealth objective. Audit your numbers. Increase value per client. Optimize margins. Convert income into assets. And treat the next quarter like it matters. Because it does. Game-changing wealth isn't accidental. It's an outcome of a well-engineered business strategy. And it can be well achieved in 90 days. If this story shifted your perspective, subscribe to Business Strategist, where we turn ideas into impact, because strategy isn't optional. It's everything.